Hello students, welcome to my channel Accounts Global. Students, in this lecture I am going to discuss the concept of accounting equation. It means there is an equation which is used in accounting. And remember one thing, for the beginners who just started this subject accounting, to understand the concept of accounting equation is a must, that is necessary. It will help you to understand the meaning and concepts of different assets, liabilities, capital, and the items which affect assets, liabilities, and capital. And at the same time, it also helps you to create your interest in accounting, and you would be able to understand the double entry system, the rules of debit and credit. So what is accounting equation? Accounting equation simply states that assets are always equal to assets are always equal to liabilities plus capital. You need to understand the meaning of assets, liabilities, and capital as well. Visit the channel and go to the playlist accounting terminology. There I have explained all the terms in detail, but here also I would like to explain this. Assets means what? The property of the business. Anything which is in the possession of the business, which contribute benefits to that organization for a long period of time, like the machinery, the land and building, the vehicles, the investment. What is the liabilities? These are the obligations, any amount payable to the outsiders. For example, in order to run the business, in order to expand the business, you have raised a loan from the bank. So that is your what? Liability. You purchased goods on credit that give rise to creditors. That is also part of liabilities, the outstanding expenses as well. The capital. Capital means what? The funds, the amount invested by the proprietors into the business for the purpose of establishment and for running that business. So this is the very simple concept of assets, liabilities, and capital. Now what is accounting equation? Accounting equation states that assets are always equal to liabilities plus capital whenever any financial transaction takes place, like purchase of goods for cash, purchase of goods on credit, sale of goods for cash, sale of goods on credit, payment of expenses, receipt of any income, that always result into this assets, always liabilities plus capital. It means effect of every financial transaction takes place on assets, liabilities, and capital in such a way that accounting equation always holds good. Accounting equation always holds good. It means accounting equation always proves that assets are equal to liabilities plus capital. Why so? For that purpose, you need to understand the double entry system also. You know that in double entry system, there are two terms on which the entire accounting is based, and these two terms are debit and credit. Now just think over it. Assets always show the debit balance, because whenever the assets are purchased and acquired into the business, according to the double entry system, according to the rules of debit and credit, assets are debited, and liabilities, whenever any liability arise, these are credited, and capital, whenever funds are invested by the owner into the business, capital is credited. And double entry system states that all debits are always equal to credits, all credits. And every transaction whenever takes place, if one account is debited, the another account is credited with the same and equal amount. It means debits are equal to credits. So what accounting equation reveals? The same thing, debit equal to credits, because assets are showing the debit balance, liabilities and capital showing the credit balance. This is one aspect you need to understand. What is the second aspect? Second aspect I tell you, which is very easy but necessary to understand, necessary to know: liabilities and capital. These provide funds for the business, funds for its establishment, funds for its running, expansion and growth. And with the funds provided by capital and liabilities, what we do? We arrange, we acquire assets for the business. Just take an example. For example, you raised a bank loan from the business for rupees 50 lakh, loan of rupees 50 lakh. On the one hand, the bank loan, it means liability increase by 50 lakh. On the other hand, your bank balance increases by rupees 50 lakh. So assets are always equal to liabilities plus capital. Further, I take another example. For example, out of this rupees 50 lakh, rupees 15 lakh rupees paid as salary to the workers, 15 lakh. So minus 15 lakh paid for the expenses, say salary. That reduces the bank balance. On the other hand, it reduces the liabilities also, that is deducted from capital, because expenses are always deducted from capital. So I wanted to prove that effect and impact of each and every financial transaction takes place on accounting equation in such a way that assets are always equal to liabilities plus capital. See this. Now it is 35 lakh, and that side also it is 50 lakh bank loan as it is, but minus from capital. If we have a already opening balance, that will reduce the amount of capital. It means 15 lakh. See, so net is what? 35 lakh. Net is again 35 lakh. See this, friends. So accounting equation always hold good in every situation. When bank loan is raised, assets increase, liability increase. When payment of expenses is made, then assets decrease and capital decrease. And one more thing you need to know: based on this accounting equation, you would be able to understand that two sides of the balance sheet are always equal. See the two sides of the balance sheet. I would like to explain that concept also. See, the pro forma of the balance sheet, I would like to draw here. This is the balance sheet. Balance sheet has two sides, and we write here balance sheet as at, we write here the date 31st March. The left hand side is the liabilities, and the right hand side is the assets. That is the assets. See this, friends. In liabilities we mention capital because this has a credit balance, and the liabilities like creditors. And on the asset side we mention here cash, which is an asset, bank balance, which is an asset, stock, which is an asset, debtor, which is an asset, land and building, which is an asset. And two sides of the balance sheet are always equal. What is this? This is an extension, say, of the accounting equation. Assets are always equal to liabilities plus capital. So students, listen the lecture carefully, have the understanding so that your basic knowledge in accounting improves day by day. Stay connected, improve your knowledge. Share the video with your friends and classmates. And don't forget to subscribe the channel if not yet subscribed.